Hi everyone, this is Kyriakos and today we're going to talk about how to reduce your VAT bills. Firstly and foremostly, we need to understand how the VAT returns work in order to be able to reduce our VAT bill at the end of each quarter. So the VAT return is prepared based on the sales and the purchases and expense results of the current period. So every time you raise a sales invoice, you have to charge VAT. Similarly, every time you buy something, you have your company's purchases or you have expenses such as overheads, rents, telephone, you have to pay VAT. The difference between the VAT amount on your sales and the VAT amount on your purchases and expense invoices is the amount of the VAT that you have to pay at the quarter end. So how can we ensure that we always pay the minimum amount to the VAT authorities? The way to do this is pretty straightforward. Firstly, we need to ensure that we only raise sales invoices when we know for sure that our services or our products will be paid. There's no point raising sales invoices if we're not going to get paid for them and prepay in that sense the VAT amount due, because we are prepaying to the VAT authorities the amount on that sales invoice without having received the funds for that sales invoice or without having received the VAT amount on that particular sales invoice. To ensure that we know how the local VAT regulations are, we need to make sure that we understand when the VAT tax point is created. According to the Cyprus VAT law, the tax point is created the earlier of the sales invoice is being issued, the funds are being received in our bank account, or the service is being provided. So you should try to raise your sales invoices once either of those three criteria is met. Moving on to the purchases and expense invoices, we need to ensure that we are tidy enough so that we know exactly what's going on. We don't lose any expense invoices, any overheads invoices, or any purchases invoices. The way to ensure this is to always be very tidy and to provide to your local accountant on time all your information for that particular period for which he or she is preparing your VAT return. The records that you should always provide to your accountant for the VAT preparation are the following: sales invoices, expense invoices, purchases invoices, bank statements, checkbooks, visa receipts or visa payments, and any other correspondence, documentation, or invoices that relate your company or yourself if you are a self-employed person and fall within the VAT period. Your accountant will have to gather all these, process them in order to ensure that all your expense or purchases invoices have been collected. So, to sum up, first, sales invoices. We always need to ensure that we raise sales invoices if we know for certainty that we will receive the funds. If we're not going to receive the funds, then you can either raise a sales invoice and raise a cancellation invoice or a credit note, or don't even raise the sales invoice at all. Number two, make sure that you're tidy and you provide to your local accountant on time all your expense invoices, overheads invoices, bank statements, and all the supporting information around the bank. This will ensure that any invoices that are slept through the net and did not arrive to your accountant will be picked up by your local accountant, and in the end they will get processed in their accounting system so that you will arrive to the correct VAT bill for the end of that quarter. I hope you found this information very useful. Thank you for watching us, and we will be free to assist you with any queries you have at the email kt@cyprusaccountants.com.cy. Alternatively, please visit our website at cyprusaccountants.com.cy, where we have all this information written there just for your usage. Thanks for watching and stay tuned.